Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guide podcast, and today we're going to do a quick market update on rates, and we're also going to talk about pre-approval versus pre-qualification, and I have a special guest today. Gracie, my son's service dog, was joining me at the office today. Gracie, you want to say anything in the mic? Anything? Nothing? You want to look at the camera? Nothing? All right. Just sit there and look pretty. All right. So, the market's been a little turmoil-ish. It's a new word. So anyways, what happened? So Moody's got Gracie. Where are you going? You going to sit still? You going to stay there? Stay with me. Say hi to everybody. Stay right there. Anyways, Moody's, one of the big three on the rankings, they kind of go out and they rank financial health on certain lenders, insurance companies, financial institutions in general. Well, Moody's dropped us down from a AAA down to a AA1. So what that means is that they were concerned, and I've talked about this in the past, about the credit risk of the U.S. government and their ability to back their financial obligations. So concerns about tariffs mixed with some U.S. debt growing and some of the burdens that we're facing currently was part of their concerns on why they downgraded them. They've been talking about it for a couple years now, just made the move. But what it did, it pushed the 10-year Treasury from 4.43, which the 10-year Treasury yield is what mortgage rates kind of follow. You are just being loud in that microphone. Maybe this was a mistake. What do you think? Is it good? All right. Anyways, we're at 4.43% on the yield for the 10-year Treasury, and it kind of inched upwards to 4.56, which kind of pushed the mortgage rates on average. Again, I always talk about averages, not me quoting you a rate. 7.08%. That was as of Wednesday, a couple of days ago. You good now? All right. Anyways, so that's what's happening, guys. So we've seen a lot. There's a chart that Justin's going to pull up for you, kind of show you where the rates have been going, what it's been looking like over the last couple of years, really, because we saw a lot of dips, increases. Dip in 2024, like in September 2024, we saw them go down back into the low sixes, and then we shot back up into the sevens. And we've been battling this mid-6, upper-6 range on conventional financing for like the last 4 or 5 months, and now they're back in the sevens for the last couple of weeks. But this is the highest point on average for quite some time. So that's what's going on, guys. It kind of sucks, but it is what it is. It does suck, doesn't it, Gracie? Now the weather sucks outside. It's awful. It's been raining. Anyways, let's talk about pre-qual and pre-approval. This is a big deal, all right? I know you don't care. Just hang with me a little longer. Pre-quals. So a pre-qual, if someone calls me or you call a lender, and we get this a lot. They're like, hey, here's my credit score, here's my income, here are my monthly debt obligations, what could I buy? Well, we can kind of give you an answer. We don't know what your credit score is yet. We haven't validated that income. We haven't validated that those debt obligations from the credit report. So we can kind of give you an idea. I'm going to tell you, we're not going to issue you a letter, okay? That's something, if you're just trying to get an idea, you can do that. But if you want to step up your game and truly get a pre-approval, and that's what we typically send out, we're going to collect all the data, name, social, date of birth, where you work, where you live, assets, all this, hourly wages, okay, how much money you're making. We are going to do a credit check. Now, it's your call. Now, here's where I stand on soft pulls, hard pulls. Soft pulls, if you're just kind of figuring out where you want to be and start your shopping process, then we're going to do a soft pull, right? We're going to have to do a hard pull eventually once you're in contract. Now, if you were like, hey, I found the one. This is it. I'm looking at it tomorrow night. I want to put an offer in. I think this is it. I'm going to do a hard inquiry on it, right? Because those hard inquiries are good for 120 days. Let's go ahead and rip that Band-Aid. Let's get it going. And make sure when you put your offer in, there's no issue. But we also want to collect, if at all possible, W-2s, taxes, depending on self-employment, not self-employed, depends on the program too. 2 months of bank statements to validate assets, 401k statement, if we're pulling from there. If you feel like you have a gift, maybe a quick conversation with your donor. The pay stubs are the biggest one. One of the biggest challenges that we have in our industry right now is all the agencies like to average income, right? So if you missed a couple hours of work or a couple of days of work this year, you didn't get paid for, you had no pay, no penalty or something like that. The agencies want to average your income, which is it's something we fight all the time, okay? We fight it all the time, 40-hour work weeks, what have you. So we do like to validate the income, all right? Because a lot of times we'll say, yeah, I work 40, I make $25 an hour, we get the pay stubs, and No, you work 36 and you make $23 an hour because you're counting something else that we can't use. So we do like to validate that piece so we can confirm, yes, here's your loan amount. We ran your findings. We're good to go, whether it's manual underwriting or automated approvals, right? That's the difference between pre-qual, pre-approval. Is it fully underwritten? No, it's not fully underwritten. We can do that. It's going to take a little bit longer. But there's a lot more stuff that can come into play. Just because you have a pre-approval letter doesn't mean everything's a slam dunk. Give you an example. Got a file going right now. We did the fraud report. Well, there's some old judgments hanging out there that we found on the fraud report that was not on the credit report. So those types of things need to be paid off, settled, payment arrangement set up, something going on there that can upset the apple cart a little bit. So there's a lot more to it, of course, but you do want to take the steps of doing the pre-approval. Be ready when you call your lender. We find that there's a lot more people that call late on a Friday, have to see a house tonight and put an offer in by tomorrow morning. That is difficult unless your credit is perfect. Job time's amazing, assets, you got too much in the bank. That's not a common occurrence, all right? There's a lot of stuff that has to be done to give some certainty behind that pre-approval letter. So make sure when you call your lender, have your bank statements ready, have your pay stubs ready, have some W-2s at least, and we can deal with the tax returns later. If you are self-employed, you have to have your tax returns ready. I mean, there's just no ifs, ands, or buts about it. So I just wanted to touch on that again and introduce you guys to our special guest, of course. Gracie, thank you for coming on the show. You want to give a little shout-out? She doesn't speak. So, it is what it is. All right, guys, that's all I got for you this week. Remember, subscribe on YouTube. Check us out on Apple Podcasts and Spotify. And we will catch you all next week. Have a great holiday.